In business tonight, stocks rose in China with the easing of tariff levels with the U.S. Hang Seng closed 3% up, while mainland indices ended in the green. The yuan strengthened to a 6-month higher earlier against the greenback, now trading against the 7.2 mark against the USD. Pointing towards a rally when markets open, U.S. equity futures jumped. And in the forex market, the U.S. dollar gains against a basket of major trading partners' currencies, while the yield on Treasury bills jumps. Now, for more, we are joined by Jayant Menon, live from Manila. He is visiting senior fellow of the Regional Economic Studies Program at ISEAS Yusof Ishak Institute. Mr. Menon, thank you so much for joining us this evening. First up, your evaluation on the 90-day tariff suspension. How do you assess its significance in the broader context of U.S.-China economic relations?
Firstly, I guess we should recognize that this is a welcome move, slightly unexpected in a couple of dimensions. One is that, the extent of the tariff cuts on both sides of 115% was a lot higher than we were led to believe by the president himself. And also how quickly this was agreed. But let's not get too carried away. This is a pause, so it's a ceasefire, basically, with some troop withdrawals, if you like, temporarily. So a lot will depend on what happens in the next 90 days and beyond. We should recognize that there is a lot here to work on, and 90 days is unlikely to be sufficient, but it'll be a start, and certainly it's a de-escalation while the pause is in place, so that's welcome news.
And what's taking place within these 90 days is that the establishment of a mechanism to continue discussions. What do you anticipate this will entail, and how might it influence future negotiations between both sides?
Well, I think what we have to deal with first is this new rise in protectionism, which is the new tariffs, right? Even with this sharp reduction, we are actually in a worse position than we were before Trump took office for the second time. So 30% is still significant. So we need to look at how that can be addressed. But it's a lot more than just tariffs. I think one issue I hope will return is a level-headed discussion about the non-tariff barriers on both sides and how we might go about addressing them. I think the U.S. has legitimate concerns about various non-tariff barriers in China relating to intellectual property and the role of state-owned enterprises and the like. But equally, I think we've seen a rise in a lot of these non-tariff barriers in the U.S., and a lot of them during Biden's administration, where subsidies and export controls increased sharply as the trade war escalated. So it's a lot more than just tariffs. And the main game is still non-tariff barriers. And a lot of these issues need to be addressed initially in the 90 days, but it's going to take a lot longer before a comprehensive deal can be reached on these very difficult issues. But it's a good start. I think today is a good start towards moving forward on both the tariffs and hopefully the non-tariff barriers.
All right, so we're sensing some optimism there. But there's ongoing trade tensions and tariff impositions, Mr. Menon. They have disrupted global supply chains, particularly in sectors like technology and manufacturing. How do you foresee these disruptions evolving in the near future? And what strategies should businesses and governments adopt to mitigate potential risks?
Right. I think this is a critical point and a especially for this region, Southeast Asia and Singapore. Until today, the risks of decoupling and bifurcation of supply chains was rising daily. A world of duplicate supply chains was becoming more and more of a reality, but that has now been put to a stop for now. Let's see how things evolve. But right now, I think we can see the possibility of reducing the risk of bifurcation or complete decoupling, which would be disastrous, really, for the US, for China, and this region. Nevertheless, I think it's true that fragmentation is taking place, and we should prepare for the very real possibility that this will continue. I don't think this will be the end of the tariffs or other instruments being used to deal with perceived concerns on both sides. I think we'll see this trade war continue way beyond 90 days, maybe a year or two, as things evolve. The Trump administration has made it very clear they want to balance trade. That's their ultimate objective, and that's never going to happen. So whatever is agreed may soon be amended if the objective is not realized. So firms, I think, in this region should actively start pursuing diversification and try and reduce their reliance on any one country to any great degree. So diversification is the need right now, and the more diversified, the better.
All right, Mr. Menon, appreciate your insights. Thank you so much for speaking with us. Jayant Menon there, visiting Senior Fellow of the Regional Economic Studies Program at ISEAS Yusof Ishak Institute.